All right.
Rick Goley, what I would like to know over here is that this is the symbol XOXL, and it's a daily chart. What does this represent, sir? And how would other MMTs identify it?
The L would represent the long in the semiconductors. SOXL would be long, or the bear. I'm sorry, or the bull for long.
Okay, so you got a bull, SOXL, and always just with the symbol L, you know it's a SOX long. Okay?
That is correct.
So, having said that, let's take a look at the bear and how we would identify that one. Okay, now we have the SOX with an S, one daily on it. Can you tell me what that means, sir?
Yeah, the SOXS would be just the opposite of the L. So that would be the semiconductor 3 times short ETF, which would be the bear.
Okay, so basically, could you tell me, in a trade like this, can you sell short this ETF when it goes down in value, sir?
Not only can you, but you should.
Well, you should.
And go long the other.
So down here at this bottom, which is your daily bull, here's your daily bull now. And this is your bear right here. So here's the bear, so you can short that. And Leo, could we go long this now that you're a new MMT? So if I'm breaking down right up at these tops 5 days in a row and I'm breaking out 5 days here, I get paid twice, right?
There's a nice confirmation qualifying green bar at the bottom there that would tell us time to get in.
It would, because if this is failing up here, then this is going to get net long, and you're using the big down bar for weakness. See the 2 big down bars? And you see the 2 big green up bars. That's what you're associating with, Leo?
Right, and then there's that volatility pop on the red bar there, and then the green bar on the short, and then we know that it's going to drop down or pop up to the teeny line where we can enter.
That's exactly right. So
right, I've been listening.
If we are selling the diamonds that go down in value, see how the diamonds are going down and everything else goes down, and you see how these diamonds are rising.
Indicator.
Right, it's a proprietary indicator in the market maker platform that you've been using. Do you find it quite accurate, sir? Yes or no?
Well, right on the money.
Okay.
And I do big money.
Yes, it is directional price movement. Is that what we've come to a conclusion with? So if I'm getting a directional price movement and weakness here, I make money. And if I get a strong reversal going the opposite way, I'm long, and I get to make money as well. And is it factual, Leo?
Never seen it miss.
Okay. Now, for anyone else here, Will, if you're available, do you see the directional price movements and how weaknesses build in the red bars? And then that teeny up is just a electronic robot, per se, in the ECN pricing. That pops it up 2 teenies but makes lower lows, and this is putting in the bottom. See, these 2 green bars are just like these 2 red ones here. So if I was to blow this up a little bit more with my spyglass, and this is how you use them, MMTs, okay? And you can see that big explosive move up there. You can see how nice these green bars were setting up as just the very opposite if I blow these up over here. Because the beautiful thing about your platform is that you can clearly see the full picture right here. Here you go. They're all right here. Now Rick Goley and Leo and Craig and Fritz, if it's okay, and Mr. Flag, one thing that we're never going to ignore is where weakness builds in downside or downward price action. But most importantly, MMTs, is that there are those ECN pops, 2 teenies up, but then the qualifier is that red bar is there with the gap below half of this bar, and you're on your way down, and vice versa. MMTs over here in price action. We're going to work our way up. So we get the negative, this negative weakness in here as a short now, and we verify here that teeny expansion, teeny contraction going down in value, and teeny expansion going up in value. This is how you want to see bottoms put in. And these are tops. They're the opposite here. And it's very clear. So do you feel that you could gauge a market by understanding whether it's this very bear or bull versus any other ones that you will be trained in your yearly apprenticeship, as you all are? Do you find this valuable, everyone? I didn't hear from Craig. What have you learned today? If you don't mind talking about it. If you're off and gone for the day, which I don't see you there, then we'll ask Mr. Flagg. What do you... Okay, who was just going to speak up?
It was me, Will.
All right.
It's totally clear to anyone here, because trading on the MMT platform, you feel like you've been flying or navigating a boat without a compass, because those diamonds give you all the directions in the market, and also it shows you all the moving average, pretty much all the volatilities, the volumes, all that. It all gives you confirmations.
Right. So when it does, doesn't it? And we know that we know that most public people will never know how to make this transaction or this transaction. We know that because a lot of people don't look at these things, right? Or they just don't know the mechanical parts where the platform does the work for us. Is that what I'm hearing?
Yes, absolutely, because this is not your average technical analysis. No, not at all.
No.
This is a totally different beast.
Right. And each one has everything that it needs. It has its info panels down here for you. Okay? And it has your data that you're going to get. And you just raise them up, and you can see where you're at all times. So it is exactly what you said, Will. It is. It's really showing you that there is two sides to every coin. One of this is a certain one. This is the bear SOX ETF, and this is the bull. This is the L, the long, as Rick Goley said. And so you can trade this intraday or daily, because when they're going to move up, we're going to see if they have options on calls and puts here in both of them for options. Because if you're trading that long and you're trading this long, and here, let me pause 1 second now. Let's break. There's another one called the SOXX, because you can be long that too, right? So let's take a look at that one. Hold on. Here we go. So, Mr. Goley, if you knew what this is, which you do know what it is, can you explain to me what this is in relationship to the SOXL and the SOXS, which is right here?
Well,
SOSX is a short and a long, and
correct.
This is now the SOSX is what, sir?
The SOSX is actually the index itself. It's not 3 times, but it does correspond with the semiconductor index.
So let me ask you to be safe that right here, this is called the SOX.x, and that's all of these combination of stocks that's in that index right here. And let me go back and pull up the charts again. Rick Goley, now go ahead and continue on about this breakout on the SOX. We already know what it's related to, and how is it going to play its role with the L, which would be the long ETF, and how it's going to play a role with the S, which is the short ETF, and how many positive debits can be traded within the actual price action movement. So we know that we have that SOX right there, and we also know that the long one, which is the SOXL, goes up and up. So go ahead and explain the relationships, if you would, and why you would be making those transactions, getting paid 3 times, and you are taking directional movement. And does it just work on this, or does it work on several?
It works on several. And why just get paid once when you can get paid 3 times or more?
All right. So if I'm going long here, which is in the video, this is the XL, and this is the X, this is the S, this is the short. So that breaks out, the short goes down, and here's the SOX itself breaking higher. So you got 2 longs and a short working all within directional movement, and rather it's in this one or many others that SMF covers. We cover all of these bears and these bulls and these sector indices, how to trade them long, how to trade them short. Now, is there anyone that hasn't learned anything today on Independence Day?
Actually, we've learned a great deal. It's been a great day.
This has been a great class.
It has, because now what has to happen is that these are daily movements, and we know that they're daily reversals, and they're different than outside of your intraday market making skill, but understanding that these apply to major bottoms on indexes like the SOX that didn't want to go lower. The S&P didn't want to go lower. We got a 5-day rally. It's a 4th of July. It's a great time. And it's a great time to move forward, in my view, as to knowing that if I'm getting a bottom over here and I'm getting a top over here, I'm going to be able to adjust my risk as to which, if something isn't working, I'm going to be able to really have a lower risk tolerance, right? Because if I'm getting short over here and it's working, my risk of this long over here, it's going to go up in value. They're not going to go together. One's going up and one's going to go down and one's going to go up. And we're going to move on to the next lesson. And this is a special premiere, not just for the current MMTs, but rather this was done on a 3-minute level, a 15-minute level, a 60-minute level, and naturally your daily level, as how price action is accumulated at a bottom when markets did not want to go down. That had a 5-day rally consecutively, day after day. And another thing about market bottoms in public analysis, 5 straight up days in one direction is, in their view, a beginning of a new bull rally. But listen, that's their view. Our view will remain right here in these charts, MMTs, and the directional movements will also create the price movement one way, and the other, we're going to know where the markets are. And not only are we going to have this index, and so we got the sector indices, the SOX. We've got the long ETF and the short ETF. They're all 3 right here in this very video, MMTs. And the thing about it is, we're going to do several more. We're going to be very well diversified MMTs. We're going to be diversified to sectors, to risk, to which directions markets may or may not want to go. It's going to tell us where the public buyers and sellers are. It's going to tell us where their sentiment is. It's also going to tell us the strength of the sectors by understanding where that net strength or weaknesses in directional movements, so that we can get the equal price of everything. So we know exactly where and how to handle the July earnings season. July 11th, 2011 is when the earnings season is going to kick off. There's going to be lots of big risk for investors and traders out there in the world and whatnot. And the thing about it is, we're going to monitor what their risk is and their behavior. When they wanted to be net long and things didn't want to go down at the bottom anymore, that's the time to get long. And I'm going to tell you, that was the time to get short in directional movements. It went one day, then it made its 3rd day down. It made its 3rd day breakout, its 3rd day reversal down, and it's third day breakout over here, MMTs. And the thing about it is, once you get past 3 days and you are holding higher levels in your MMT, meaning that those altitudes are elevated higher, that means that it's strong, extremely strong in price. And you have to know when to let your winners run. And there's only one way of doing it. The weaker this gets, the stronger that these upside moves will happen. Not only that, we have options that we can apply an option to this trade on the long. We can trade options on the SOX going higher in long and puts on all of it. So yes, you get paid 3 ways in this directional movement, but you can add on 3 more debit possibilities in the trade, and it could be you have 6 potential ways, and we're going to go into the next phase, into the options training with these 3 components along in your general components that you need to be able to successfully monitor risk in markets and what the public buy and sell tape is all about, especially during the earnings season.